Hello dear students, today we will explain next part of journal entries and today we will explain journal entries of lease. First of all, I will explain what is the meaning of lease. Lease is the agreement between two parties. One is lessee and other is lessor. This is first party and this is second party. In this agreement, this is agreement. Lessee use the asset, and lessor gets earning, lease earning, and this is rent. Suppose this is A and this is B. A gets the machine for 5 years and lessor gets rent $2,000. So in the lease we have to record what transaction happens between the lessee and lessor. For this we will classify the lease in two parts. Classification. First lease is capital lease. This lease is also called finance lease. And second is operating lease. So accounting treatment is different in capital lease and in operating lease. How we can say this is the operating lease and how can we say this is the capital lease? For this, IFRS, International Financial Reporting Standard, make a simple rule. In the case of capital lease, you must be the transfer of property. At the end of terms of lease. When lease will be closed, the property or fixed asset will be transferred from lessor to lessee. Second, main condition is purchase bargaining. This capital lease is on the basis of bargaining, not a fixed price. And third is 75% time. Suppose life of the machine is 6 years. So 5 years is the lease time, active time 5/6 into 100, and this is 4 5 4 9. This is a 90%. So we need 75%. Lease time must be, we can say it, lease time must be more than 70% of total life of asset. Lease time must be more than 75%, and last, present value must be equal to the 90% of the fair value of asset. If we sell the asset, its 90% will be the present value, then it will be the capital lease, otherwise it is operating lease. Now we will treat first the capital lease journal entries. In the books of lessee, who gets the assets on the lease. In the books of lessor. Now, first of all, in the books of lessee, when it is a capital lease, so asset is just like the purchase of the asset. So we can say a machine, in case of machine, or in case of any other asset, fixed asset. Asset account debit, and we will say lease payable. Account credit. What amount of lease we have to pay in the times, in the period. It may be 5 years, it may be 6 years, it may be 10 years, it may be 20 years. So this is the increase of assets. So we will debit the fixed asset. We have to pay the amount of lease. So this account will be credited. This is the beginning. Of time, and in the first year or in the next years, the end of the first year, first and subsequent years, we will say the depreciations is the expense of the lessee in the capital lease. So we will say depreciation account debit, accumulated depreciation account credit. We transfer all depreciation to accumulated depreciation account. So the value of asset which is leased hold will not any change. We cannot change any in the amount of this, and we show this amount in the credit side of balance sheet. And then in the capital lease, we will pass the amount of payment of lease obligation in first year and interest. Lease of obligation may be the principal amount plus interest. So this will be say payment. What is payment? Payment must be principal plus interest. This is payment. In a hire purchase system, we can say it installment. So there is a little difference between the hire purchase and lease system, and we here say payment. So we write here lease payable account, debit interest account, debit to cash account. Since the end of the first year and subsequent years, we will pass the entry lease payable account, interest account to cash account. In this amount, we show the principal amount, and this is the interest, and the total first installment means first year interest. In this 2000, one is principal and next is interest. Okay, and in the next year we will pass same entries till the close of the lease, and in the end of lease the property of fixed asset will be transferred from lessor to lessee. Now in the books of lessor, in case capital lease, he will show just lease receivables, account debit, and here he will show fixed asset account credit. For this, for lessor, it is just like sale. It is like a credit sale. Lease receivable account, just like account receivable account debit to sale account. Like this, we can say lease receivable account debit to fixed asset account. And when he receive the income, cash account debit lease receivable account credit. So these two entries he will pass, lessor will pass. Now we are discussing the operating lease. In operating lease, we will not pass in the operating lease. We will not pass this entry. We just pass. We will not pass this entry. Not pass this entry. We just pass rent account debit to cash account. Just, or in this case, cash account debit to lease earning account. We'll just show 2000. Okay, thank you very much.